I don't have to tell you this, right? Lots of moving parts in this market. I mean, everywhere, and for many investors, obviously, it feels like a ball of confusion. For many so-called experts, it does as well. For my next guest, I'm going to say it's just another day in the office. I'm going to bring in now iCapital Chief Investment Strategist, Sonali Basak. And, there's a lot of concerns out there. And we were just kind of talking in the break. Let's just start with the overarching issue with this conflict. Even before the conflict, there were signs of inflation coming on. Yep. People were bracing for some of this economic data later in the week. Inflation and geopolitics. How does someone model that into what they're doing, into their, day-to-day investments?
We got a lot of very important inputs this week alone, CPI and PCE, getting a sense of where inflation had been before the war broke out. And that's important. As you said, you saw manufacturing input prices started to rise. Is inflation very sticky still, notwithstanding the war? Now, when you add the war on top of that prolonged set of oil prices, right? If you have a blip in the radar and we are able to achieve kind of a decline in oil prices from here, that wouldn't really feed through in a meaningful way and have a meaningful spillover effect. But the kind of finger in the air kind of range I'm using, $85 to $95 a barrel, if we see that for a sustained period of time, then do start to think about...
Sustained? 4 weeks, 6 weeks, a month?
3 months.
3 months, okay.
Give or take. Okay. We don't love it anyways, right? Because you feel the prices at the pump already, for example. None of that is good for consumer sentiment, but the consumer sector was not one we were recommending anyways. We felt that there were some sensitivities there, certainly in the K-shaped economy, but you didn't really feel whether there was a trade-through effect, trade-down effect when you saw the consumer sector writ large. But there are other areas that are also affected by the consumers, like financials, which have been drastically sold off. Does that make sense to you when we still see growth that is holding up, a little impacted, certainly?
So the answer is no, and if it doesn't make sense, should that be a red flag?
For what? For inflation?
For financials. I mean, just for financials, the lagging sector in the S&P, they were supposed to be the top sector this year, one of the top sectors, led by banks who are supposed to have an amazing year, and they've been the exact opposite. So does something like that concern you? Can you put a finger on why this is the case?
There's a lot of uncertainty out there. Nobody likes uncertainty. But let me tell you something remarkable. You look at the VIX topping 30 just yesterday, and you're watching Amazon today turn around with a $50 billion bond sale potentially. Right. You're seeing IPO filings come to the surface. You're seeing M&A still happening. So business is getting done regardless, which means that even on top of the volatility, the banks are going to be making money. So when the next earnings season comes around, that might create a little bit of comfort.
What about interest rates in the Federal Reserve? Everyone sort of is saying, okay, second half of the year, rate cuts. Is okay with that. You have no choice. But still a lot of question marks on where rates will, inflation and rates and wars.
There's a choice. There's certainly a choice. And I think you have to look at everything data point by data point at this point because we're at a precipice, both in terms of the labor market and now also in terms of inflation. If we see inflation tick higher, then you would have that smaller chance that we see that stagflationary scenario, which is very bad for risk assets. But on the side of the inflation story in the labor market, the labor print we just saw last week, disappointing. You don't want to see another one of those.
Right.
And so if we see another one of those, and we've been warning about this all year, you would see what we're calling bad cuts, where the Fed has to cut to keep up with the labor market rather than to get us back to neutral.
So with less than a minute to go, of all of these things spinning around, what's the one that gives you the most hope? You kind of alluded to it, that despite all of this stuff, we're not far off the all-time high, and business is still getting done.
Listen, this is a chance to step back, let the sentiment flush out for a minute, and eventually there will be an opportunity to step back in, both in public markets and in private markets. But on this one, let the sentiment ride out for a minute. There's too much we don't know to make big bets for the future, but create a shopping list, because eventually that time will come once the dust settles a little bit more.
And hopefully the first thing that settles is maybe this Iran conflict, right?
Yeah, absolutely.
Yeah. Good stuff, Sonali. Appreciate it. Thank you very much.